Joining me now is Ravi Kantha, principal and founder of the Kantha team at Serhant. So we were talking before that break about how higher interest rates are challenging potential home buyers and sellers. What are you seeing for the people you're working with and your team?
So we focus on New York City. We're focused on the luxury market in New York City, and I think there's a misconception that above certain price points that the interest rates don't affect the market or cash buyers are immune from it. That is absolutely as far from the truth as you can get, because everybody's paying attention to it. And I think the biggest thing we've noticed over the last, 18 months, as this has become sort of a central focus in the real estate market, is people follow the rates like they follow the stock market when they're making big decisions, right? So it's an indicator of financial health, it's an indicator of the real estate market's trajectory, and it affects how buyers at all price points think about value, right? So if rates are higher, there's just this inherent belief, which is true, right, that prices should probably be lower. And if they're not right now, maybe they will be soon. And if they're going to be lower soon, maybe I should pump the brakes and wait. And that really is what drives our market. And obviously for people across the country at every price point, anyone who's thinking about their monthly cost of carry, right now is the first time we're seeing, some whispers of news that we might get a rate cut, which means mortgage rates are going to come down, and you feel the excitement building already. And this news is 2 days old, right? So I think it's going to be interesting to see how that plays out.
Yeah, and you mentioned the impact on the stock market as well, similar things that we see here. How do you help your clients navigate that? Because it is, we've had the threat of a rate hike, the threat of a rate cut. Maybe there's a cut coming now.
Yeah.
So when you're talking to your clients, how do you advise them to both, they hear talk about you trade the news and you sell the facts kind of idea. What are you talking to your clients about as they're trying to navigate this very complex environment?
I think it depends a lot on the asset and what they're buying, right? When you talk to a buyer who's buying what I would call like a core asset in the market, meaning something that there's a lot of supply for, right? And things that trade over and over again. Maybe it's large condominium buildings with lots of units on the same line, things of that nature. You're talking to them about how, look, like you have to think about the cost of your purchase and the cost of your sale. You shouldn't really, in New York City generally, my advice to clients is don't buy anything that you can't see yourself staying in for 5 to 7 years, or at least holding for that time period, because the cost of closing costs here are so high. But across the country, I think you have to look at each client's individual situation and talk to them about what's really affordable. I've been digging into clients' financials more and in further detail. We're not their financial advisors as real estate brokers, but being able to understand what their long-term goals are and what their access to cash and what their savings looks like, and what they're thinking their future should look like is helpful in advising somebody on what probably is the biggest decision they've made, regardless of how much money they have.
Yeah, and you mentioned earlier you do a lot of high value, high luxury real estate. We think about those people often operating outside the bounds of our normal day-to-day economic issues. Why are they also so affected by what to us would be a fair amount of money, but maybe not a huge amount for them? Are they really? Is it more mental of just not wanting to get that best deal? Or are they really being impacted with these minor percentage inflections?
I think they think about things the same way that anybody else does. They want fair value, right? Sure, there's always going to be the quote unquote bottom feeders who are wealthy and they say, I'm only taking things at a discount and whatever. But the truth is, no matter how much money you have, almost everybody would feel kind of like an idiot if they buy something and say a year later it should have traded for 10 or 15% less than what they paid. I think everybody has that mentality, and people want to make fair, sort of fair market-based, rational decisions, especially with large amounts of money, right? So they look at these things and they think, well, maybe I should wait if they don't see those reports saying things are going to get better. The market's going to get better, rates are going to get better. I think for the last 18 months, until quite recently, the vast majority of the news cycles were real estate market overpriced, everything is too expensive, rates are too high, transaction volume is down. 2023, what was the lowest in over 20 years, I think, for transaction volume across the country. So when people absorb all of that information, it doesn't matter if they are a billionaire or if they're buying their first house for $100,000, that's going to cause them to hit the brakes.
Yeah, I want to talk about sort of as you're looking at, you talked past 18 months, looking ahead, what are the trends that most home buyers should be looking at right now? You talked about, the city, the prices in the city. We were here through COVID, we were open the whole time. We saw, an empty city, now a full city. Mm-hmm. So, our mayor would like to say the city's back. Is the city back? What is real estate looking like?
Well, it's interesting. I think the city has. New York City is a place where there's always a lot of work to do. It doesn't matter if people are saying things are great or things are bad. It's a city, a metropolitan area with over 22, 25 million people. There's always so much happening, and there's opportunities for improvement everywhere. I think there's been rumblings about crime and cleanliness over the last few years in New York City. We certainly are seeing more attention paid to that, and hopefully we see improvements. But as far as the real estate market and value, New York City is one of the most, it's one of probably what you have London, New York City, Singapore. I don't think there's another real estate market in all of the world besides those three that can claim such resiliency through ups and downs in markets. A down market in New York City is 15%. Maybe 20 depending on the asset, and in some things it's less than that. When you go to other cities, you look at what happened to maybe like Phoenix in 2008. That was down over 40%, I believe. That just doesn't exist here because the real estate has such great residual value. People know that through a cycle, and we do the research for our clients and show them through the last 3 cycles, the real estate value of this asset class has never dipped below X, right? So, and we know that the recovery period is typically 3 to 6 months or 6 to 9 months. When you give people that context, it gives them the confidence to move forward in those transactions. And I think hearing the rumblings of what's going on with rates, the next 3 to 6 months are going to be a time to find some good deals for New York buyers.